Hey, good morning, folks. Hope everyone's doing all right. Happy Monday. Welcome back to European Traders. Hope everyone's had a decent Jubilee weekend. Before I get started, remember to just hit subscribe and hit that bell icon so you do get notified on future videos. So let's just get straight to business. The first thing is crude. We jumped overnight, traded at a high of about just a tick shy of 121 handle. Currently holding consolidating price around that 119, there and thereabouts. We did break through this support trend line over here, but I doubt it's going to be the measure. I doubt it's going to be the line in the sand today. Perhaps right now it's just a bit of a technical breeze through. If we do get a test of 118s, I consider that to just be absolutely cheap on day. And why? This is due to the fact that we had Saudi from the weekend coming out saying that they've raised prices. We did expect, analysts expected a 1.5 dollar increase, sorry, a $1.50 increase, but now they came out saying it's about what was that, $2.10, so a lot more than expected, which is why we saw this jump in crude prices overnight. Before just pulling back here, stabilizing, really stable stuff if you ask me. So 120 is next in line. As you can see here, this was also the high of the 31st of last month. So that's crude. The Dixie continues to strengthen. We are still trading around the 102 handle here, but as you can see here, we've made this new base around 101.7s. Um, and then, funny enough, we're seeing equities go a bit at the start of cash trade in Europe. And why is this, you ask? Did something change? Um, Not really. In terms of the Fed, no. I mean, we haven't had word from the Fed mentioning anything, basically just pulling back from the hawkish rhetoric. But we did have the NFP last Friday, pretty much giving a lot of room for the Fed to remain hawkish as they have been. But equities are up, and this is not because no one cares about the fact that rates are going higher. This is due to the fact that we are there are there's rumors on the block saying, we might have seen peak inflation, as in with the rise in prices, there's built up inventory and yada yada yada. We might be seeing peak inflation, but at the same time, the big players, your Elon Musk's, your Jamie Dimons, they are just sounding the basically alarms for the global economy, saying they don't see things doing well going forward. I did hear a podcast over the weekend saying, is this, a recovery? And I would be inclined to agree, saying no, it's not really a recovery on the equities front in terms of risk assets. If anything, I personally would be looking for a, as we have here, like, these levels like 4,200 to just get retested. Beautiful shorts. And if we do get fail to get back above this supportive trend line we've seen from the bid from basically the month lows here, we could potentially see this go back further down. It might not be a smooth ride. We do have interesting data coming out for the week. So ECB meeting is due this week. We have Chinese trade data, inflation print for the US on Friday. So that's going to be a big one, right? In terms of like, so they've raised interest rates. Has this had any real effect on the inflation print going forwards? Are the notable So we basically just having FX. I mean, I'm not too worried about the sterling, but looking at, sorry, it's a bit messy. If you look here on the euro, you can see this is just really clean stuff. this prior resistance turn support area that I keep mentioning over and over again have really just played its part really well. So for those FX traders, if you're looking, if we do get a retest of this prior support here about 1.1 spot 06600, so there and thereabouts, we are holding above 1.1 spot 07s. Would I go long there? Really tricky, really tricky. But if you do, like I said, this is line in the sand. Going forward, I'd say gold is nicely with held up above this supportive trend line. The inflation picture is still in the basically in play. So if you do, what speaking of this, if you do get a softer inflation reading, then we might see gold just take a pullback. So I mean, in terms of like how the macro plays out there. All right, so back on the Aussie, which I've been talking about the Aussie for for a couple of weeks now. When I mentioned like data's come out really well, the Aussie's holding up. You're seeing the bit go through the Aussie, so it's holding up really well. Like we haven't seen a retest of the basically the 71,000 handle. This supportive trend line is still in play. As you can see here, just go back down there and it's back to getting bid up. So we've got spot 72,000 being support for today. That's a low of day for today. This resistance here is still holding. Tested to the tick before just turning back around. So it just goes to show how strong and how relevant that resistance level is. So if you do get if you do trade above, not like this, if you do trade above, hold and continue, I think we might be seeing the Aussie go back for like your 74,000s and 75,000s towards the end of the year if you do trade back above. But at the same time, do bear in mind that the Fed is also hiking in its hiking cycle, so it might we might get a bit of whippy action, but so far I'd say so good. This is really strong price action from the Aussie. So that is it from me today. It's a bit of a longer one as Tim is not in the office, so I thought I'd just go a bit more on the technicals. Any questions you might have, feel free to drop them in the comments. Reach out to us in the Dome Capital Discord room. I hope this was, I know this was useful. So have a good session ahead. Bear in mind, any news on US midterms, which is going to be, it's going to play a big part in US policy going forward. That's all I have to say on it for now. All right. Cheers.